One of the fantastic things about being an option trader is I can choose whatever duration I want to trade my options contracts. I can do them a month out, I can do them a year out. If I want to day trade options, I can. Today, I'm going to show you a fantastic spreadsheet that I built, which backtests the daily moves of ETFs and specific stocks, and it breaks down the ranges and shows us some fantastic data to help our day trading excel. Let's get into it. Thanks for joining me today. My name is Levi Woods. This is Drawbridge Finance. Remember, this is an opinion channel only about money. I don't offer financial advice in any way, shape, or form. Now, today I'm going to be going over my backtesting ETFs spreadsheet, and it's available on my website, drawbridgefinance.ca. If you guys are new subscribers or are not yet a subscriber, make sure you subscribe below, leave me a like for this video, and leave a comment if you have any questions. I try to get back to all of the questions that are asked on my YouTube channel, which is awesome. So let's get into today's spreadsheet and take a look at how powerful it is. There's two major components. If you look down at the bottom, there's two tabs. There's backtesting stocks and then there's daily moves. Now the backtesting stocks, what it does is we put in a ticker and it gives me some data as to which would have been the best interval to invest. And this is really designed for long-term traders trying to figure out when the best interval is to just buy into a stock to get the best average. And it shows us the weekly moves over the past year and the stock price over the past year. But it's recently had a fairly significant upgrade, and I've added this chart that has the daily moves. Now it works in a very similar fashion. Up here at the top, we put in a ticker in cell B2. And then what we can do is we can put in a target percentage, either lower or higher or both lower, whichever you like. And I'll get to that in a few moments. It pulls up the daily volatility over time. So we look at the past year and we can see every single day what and how much percentage wise it moved. And we can see a 2 standard deviation line charted. So we can see how often it trades outside of this 2 standard deviations. And really what we want to see is where that standard deviation is, how big it is for this particular stock. Now, if you're not familiar with standard deviation, it's the amount of times or the amount of instances that a stock trades outside of a particular range. Now, if we were to zero out and start at 0, what is the frequency that a stock trades and where is that percentage? And that's exactly what this chart does. So if we look at these yellow lines, there's a single standard deviation and then there's 2 standard deviations to the upside and then 1 to the downside and 2 to the downside. And what this does is it visually shows us and tells us mathematically how many occurrences that the stock actually trades outside of these ranges. If we look specifically at Q, over the past year or 252 trading days, only 5 times or 2% of the time traded below negative 4.34% and above negative 5.48%. And the deviation at this point, if we were looking for this line, would be $256.96. The 2 standard deviation line, which we can see here, appears at a negative move of 4.3%. It occurred 37 times, and the number of occurrences was 14.8%. So that you can see the ranges that we're getting. And what is that from the previous day close? It's $260.06. It's important to know that the result of the value in cell C2 is actually the previous day's close. That's what I'm calculating this off of because that's what the calculation on this chart is using. It's looking at the difference from the previous day. If we look at October 21st, the closing price was $377. The following day on October 22nd, the closing price was $374, or a move of 0.84% to the downside. So that's what we're using. We're looking at the previous day close, and then it's giving us some numbers or numerical values of saying, well, what would a 3 standard deviation, 2 standard deviation be, 1 standard deviation, etc. And then we can program in a specific number. So in this case, what I might do is I might look at this chart and say, wow, there is an increased frequency where this particular ETF actually trades outside, and there's a large spike here where it's trading at 2.69%. So I might not actually want to target the 1 standard deviation move, but I might specifically target a specific percentage point. And that's where I can enter this up here. So I could put in, -1 here, and it's red if it's on the negative side, it'll appear green if it's on the positive side. So if I put 1%, we could target a 1% move, which would be this candle right here, and then the other one is set at 2.28%, so that would be this candle here. It allows me to make decisions with some data backing it and saying, well, where are these outlier moves? Like, how often is this stock actually moving way up here to 4.3%? Well, it very rarely happens. I mean, the one year or one day this year was the only time that it actually jumped that high. Otherwise, my upper limit could be at 3.72%, or we could just set it here at 2.2%. The way I would use this is I would probably look for large quantities of trades and look for these outlier moves right there. And that's what I've got programmed in here. I've put this in, so 2.28 to the upside and to the downside, negative 2.69. And either of these cells could be used for positive or negative numbers. And then I can get the limits that I would set. So if I was doing a day trade on this, I now know that there's these times where I've got like an upper limit and a lower limit and what that percentage move is. It's pretty awesome. Now, on top of that, what it also does is it shows me all of the data and it highlights the worst 10 days of the trading year and the best 10 days. And so it's kind of an interesting way to just look at it. It also summarizes those trades and puts them in a neat little table over here. So we can see pretty easily September 13th of 2022, which is actually just a couple of weeks ago, was the worst performing day of the year. The stock dropped 5.48%. You can also see that the following day after this large drop was green. It shows that 6 out of 10 days there was a positive return with an average of 0.3%. So after these large drops, typically just slight edge, we saw slightly more up days than down days, which is interesting data, and you can take that at face value. Now, for the 10 best performing days, we can see those are also ranked highest to lowest, and they're all in a pretty tight range, actually. You can see the best performing day was 4.2%, and the lowest was 3.2%. We can also see that information visually clustered in this chart here, where we know that they're actually very tight, as opposed to the downside, which is spread over a wider variety of percentage moves. And also it gives us the information for the following day. Was it positive? Was it more likely positive or negative? And the following day was 6 out of 10 times was negative, with an average of a negative 0.8% return, which is pretty interesting data. So this is a chart, and I mean, it's just for information. That's all it is. It's just allowing us one more tool and a quick way to look up any stock. I'll just type in IWM and hit enter, and it will just take a moment. It will populate the chart. It will show us these moves, and we can easily spot these anomalies and say, well, look at this candle right here, 2.41%. What if I was setting up a trade that was targeting that negative 2.41% on the downside? What would that value be? And at the top of the day, easy for me to put in a trade targeting this 162.13. Now, the interesting thing about this is applying strategies to it. So I'm going to give you a little tip on the type of strategies that I'm using now that I've built this chart. Now, one of the things that I love to trade are Batman trades. If you're not familiar with it, it's a put ratio spread with a call ratio spread. And the reason that I do that is because on these days that are anomalies, where that stock is moving to one side or the other, and I'm getting those little occurrences, what I can do is I can take a highly probable trade and I can turn it into a profitable trade that actually makes substantially more money, so I can have a very good return on those times where the stock moves one side or the other. The other awesome thing about day trading is that I can avoid huge risk. Now, I did another video specifically on the risk of day trading, and you guys should check that out if you haven't already. Remember to subscribe down below, give me a like so we can all get rich together. Thanks so much for watching, and see you very soon.